The Hedgeless Horseman here again, 11th of June 2024. I was supposed to cover a bunch of copper porphyry plays in the last video, but it ended up being a long rant on basically real estate plays and high risk, high reward investing or speculation. So I'll cover this in I'll cover it in this video instead. First of all, thanks to the sponsors. Quick look markets. Gold holding up there, silver, copper down a bit. Market seems to be, I don't know, having a kind of a hard time. Crypto seems to be having a bad day, not a day too soon. Anyway, so yeah, I thought I would talk about some copper poppers, and this is, of course, I mean, I think it would do people well to maybe listen in on the last video I did where I talked about let's say the dangers of high risk, high reward plays and what makes sense from a diversification standpoint, and also how to play these or play plays like this on the upside, meaning that it's not really okay to simply take huge amounts of risk and the ones that might end up working out and delivering these sought after 10 to 30 plus baggers, that if we sell every single high risk, high reward stock as soon as it's up 100%, there's no way we're gonna get enough returns in the few winners that they're actually gonna pay for the majority of losers we're gonna have. Because let's face it, most junior explorers, even if they have legit projects or legit targets, like backed up by great geologists and all that, it still doesn't mean that it's for sure gonna be an economic deposit, especially of significance. That's just something we will have to live with. I mean, not even the best geologists in the world can for sure say what's buried deep within the ground, of course. We can have good science like, geophysics, soil samples, and other context that increases or decreases the chance of success and the size of the price and all that. But at the end of the day, nobody actually knows. That's why there's nobody on earth that can exactly say what the drill bit is going to show. You can't even if you do an infill hole in a known deposit, you don't know exactly what it's going to show, let alone if you're drilling a virgin target, let's say. There's no chance. And of course you might drill and you might miss, but if you would have drilled like 20 meters to either direction, you would actually hit something. So obviously it goes up with how much testing you can do, yada yada yada. Which is, when you're doing porphyry exploration, for example, the holes tend to be quite deep and expensive. So you kinda need some good access to capital. Let's say you have only a few holes, then your target probably needs to be very defined for that to be worth it. You can't really be scout drilling 1 kilometer holes, if you know what I mean. Just going blind, you're gonna run out of cash and nobody's gonna fund you really, unless you have, like, in Brixton's case, they actually have a BHP, and I think they're all for wildcatting. I'm just gonna close the window. So okay, again, I hope you listened to the last video where I go through some of the, let's say, math behind the need for diversification and how you can reliably, let's say, actually capture the upside. In short, basically, if you start off with too large of a position, not only are you probably taking way too much portfolio risk if it's a high risk, high reward play, but also it's going to be way harder to see through the volatility and not sell everything, let's say, on 100% pop. And again, if you do that, either you start off with a big position and 100% pop is actually very meaningful already, But the flip side is that if you have a very, very large position, it's very hard to be diversified enough. Because let's face it, if you put 10% of your money in a high risk, high reward play with like 80 to 90% risk of not finding, making a discovery of significance, that means by far the best. I mean, if it's a 10% chance, if you have 10 stocks, 10% each in such high risk, high reward plays, yes, balance of probabilities would suggest you will get at least one hit. But how easy is that going to be to sit through and actually capture the upside needed if 90% of your portfolio goes down 60% and the one stock that actually is supposed to offset the other ones goes up? I mean, in the end, you would have like 95% of your portfolio in one stock. So it's not really feasible to do that in reality. So one kind of has to limit the starting position. Otherwise, the stress is going to be absolutely unbearable. And if you can't suffer through that stress, if you are very concentrated in very high risk, high reward plays, then you have a faulty strategy to begin with, because the few that work out are not even going to pay for the other ones, because we can't see through the pressure of having a big position, which makes sense that we really shouldn't in the beginning, to start off with. I hope that maybe makes some sense. But it's like, okay, why do I kind of like porphyries? I mean, I would kind of swung back and forth on porphyries because it's, again, such expensive exploration. And there seems to be, I mean, almost every junior seems to have in the presentation, porphyry potential, because a lot of the other mineral systems comes with a porphyry source. So if you have an epithermal deposit, it's like, well, that came from a porphyry probably. So everybody's going to have some kind of porphyry targets, but it's like they tend to be deep, and you tend to have to do expensive holes. And first of all, you don't know. I mean, just because there's some porphyry potential there, you don't know if the porphyry is barren, if it's big enough, yada yada yada. So it's like, I don't care too much about porphyry potential in place if the actual porphyries are not the main dish, so to speak. That is like, hey, I can make a case because we know enough about whatever porphyry target, that is like, yes, this is actually legit. It appears to have the size. We have some contextual evidence, or we have enough of targets that we can we have more cans to kick than one. But at the same time, in that case, you need good backing, because it doesn't matter if you can only afford to test 1 out of 6 targets. It doesn't really matter in a sense if you have 6 targets, because if the story gets killed, you're not going to get any more backers. If you kill the first target, doesn't matter if it was going to be a hit on the third or fourth, because you're not going to be there to find out, or the company is not going to be around to find out, or maybe in 6 years or something, or if someone else actually acquires the project. So there's a bunch of different angles, let's say, and risks to it. But at the same time, again, I kind of like it from the sense, I mean, it has high shock value. If you pull out an economic hole in a porphyry, I mean, if you're lucky, the assays can be really, I mean, kind of spectacular. If you hit the high grade zone, let's say, of a legit porphyry, I mean, there could be hundreds of meters of 1% plus copper. That, in this day and age, that's going to get the market excited. Whereas like in the gold space, there's some companies out there that drill good holes for a junior company or for a junior gold explorer, but still people don't care too much. It's not hot enough. There's too many gold plays around that can produce some kind of high grade hits and all that. But I wouldn't say the same is for copper. It feels a bit, I mean, if you drill a above average hole, I think, yes, in this day and age, people will notice. And I mean, there's stories like, I think it was maybe, I don't know if it was Newcrest, but I've heard about some porphyry. I think it's out in like Papua New Guinea or somewhere around that area, where they drilled like 9 holes, they hit, and the deposit didn't really grow much beyond the footprint delineated by those 9 drill hits. So kind of like the idea behind, Condor with Pucamayo. The idea was like, okay, if what we hope is there, they can prove it up with just 9 holes, let's say, like they did with this porphyry discovery, and like they kind of did with Pierina and some other place, a high sulfidation, bulk tonnage place. Same with Snowline, really. We knew Snowline had, was multi-million ounces after the first, well, at least 30 holes, I would say. That's the beauty of them. If you hit them, if you find one, you could theoretically prove it up really, really quickly. I mean, the inferred scale, the inferred tonnage, the inferred metal value, it's much, much, much quicker than, let's say, a lode gold deposit. Because if you drill 10 to 30 holes in a lode gold deposit, even if it ends up being a multi-million ounce system, I mean, look at Great Bear. They drill hundreds of thousands of meters. Look at Newfound Gold. They're drilling hundreds of thousands of meters. Look at Osisko Mining. They drilled over 1.2 million meters. That takes a long time, a lot of money as well, because you cannot project really. It's not a disseminated system. The veins might pinch and swell. In the case of like intrusions like Snowline, you have a big bowl basically. So, I mean, it's much quicker to prove up the tonnage, and the same, again, can go for porphyries, especially if they're not faulted off and stuff. That theoretically, you don't need many holes to show that, hey, this is an absolute whopper of a discovery, let's say. I would say I guess the same goes kind of for nickel sulfide discoveries as well, because they tend to be, pretty concentrated, and thanks to geophysics you can kind of see how the ore body is orientated and all of that, so it's relatively quick to prove up. So I would say that's a big plus, the high shock value, that, I mean, in just a few holes or in one news release, if you're lucky, it's like you can almost prove that there's a massive discovery, whereas you cannot say that about lode gold and most vein type discoveries. Big price, I mean, this is what Pierre Lassonde says his favorite asset right now is a gold copper project, which tends to be porphyries, and they can be really long lived. I mean, there's obviously big porphyry mines out there that would, in today's value, if you discover them, would be worth tens of billions of dollars. And I mean, just look at North Parks, for example. Thanks to the clustering, I mean, they have enough inferred resources basically that theoretically could go on for the next 90 years. I mean, it's like generational wealth in a sense, whereas a lot of other more vein type systems might have 10 to 20 year mine lives, but then you have to find another deposit. I guess the same goes for porphyries with North Parks, for example, because they have a lot of, it's a cluster of porphyries, not a single one, but still there are some huge ones out there, like look at Philo Mining. That's a absolutely enormous scale. Again, disseminated, makes it easier to prove up. I mean, if you do step outs, it's easier to say, well, if it's here and it's like 500 meters away, it's easier to infer that there's mineralization in between than a lode gold system, which can pinch and swell and disappear 5 meters away from where you hit it and stuff like that. Strategic, I mean, in the sense that, I mean, these could be really large if they have copper. That's a strategic metal. If you find it especially in a, let's say, first world country, that's probably on the critical mineral list, and that's what even the gold mine majors are after nowadays. Let's look at some, I mean, why, what's the point, what's the upside? I mean, we have Alkane Resources, for example. I don't know exactly, they're in Australia in the Macquarie Arc. I don't know exactly when. I mean, I haven't followed the news flow really, but you can obviously see this was the discovery phase. Now it's trended down with basically peaked with the junior sector, and has traded lower. But it's still, I think, a 380 million market cap. Obviously, they've diluted. So I would think if you included dilution, it probably traded around $300 to $400 million up here at least. And I mean, I guess this was maybe the discovery day here, whatever, 120% in one day, and then maybe some more news releases. So it's like, I mean, they can have really big spurts and stops, I was gonna say. Yeah, actually, let's look at Alkane. Okay, 326 million market cap. That's still, I mean, multiples of a lot of the discovery stores. And this is not a world-class discovery, but it is a discovery in Australia. Then we, of course, have Philo Mining. I mean, depending on where you put the low. Now it's up to $3.2 billion. We have NGX. Also, I think it's a porphyry. Well, I think they might not necessarily have only hit porphyry, but let's say a copper discovery, 1.66 billion, and these targets or these projects are way up in the Andes. Technically speaking, they are probably some of the most challenged areas in the world. 45,000 meters altitude. Again, deep in the Andes, where you would need to build 100-kilometer pipelines, etc. And all the machinery works very differently at 4,000 or 5,000 meters altitude. I mean, I've been up to San Cristobal, and that's at, how high is that? Is it 3,000 to 4,000 meters, perhaps? I mean, it just changes everything. It's like how fluids act, pressure, how the machines get run down quicker and stuff like that. So it's expensive to build, technically difficult to build, and all that still. NGX 1.66 billion, Philo 3.2 billion, and you can, I mean, these are world-class deposits, obviously, but it's like they're also more challenged than if you would find a porphyry in British Columbia, for example. So, I mean, if you adjust for the difficulty factor, I mean, if you find a much easier project, but it's not as valuable, I mean, one could equate them to having the same net present value. But this is an absolute monster. And, of course, if a junior even found half of this or half of NGX or not as good, but maybe in a much better place, I mean, they could fetch similar market caps, I think. GT Gold got sold for, I guess, 502 million on their Saddle porphyry discovery in British Columbia. And if I remember correctly, I mean, it didn't take too long. Yes, they made a porphyry discovery, drilled some more holes, but it was still in the inferred category before they got bought out for close to $500 million. And that, I think, was at lower copper prices, especially lower copper sentiment. So all of a sudden, again, it's like they were hunting for gold in the beginning, tagged into a porphyry, got bought out pretty quickly. And this is Alkane. This is this is I guess an incipient discovery. I mean, it looks like, this is an evolving discovery. It's not a barn burner market cap by any stretch of the imagination, but it's like, it's climbing. Again, this is like the discovery process. You can't prove up necessarily, depending, of course, on the system or the deposit and how lucky you are. But it's like, this looks like a growth curve, basically, de-risking steps. But it's not out of orbit yet, but it's still much higher than most pre-discovery plays, of course. I mean, for some pre-discovery plays, getting to 77 million would be like a 5, 6, 10 bagger. Atex Resources, also in, I think it's Latin America, backed by Pierre Lassonde, still 275 million. And that might not sound like much, but again, I would say that, I mean, this is still less than what GT got bought for. But that's the kicker, in a sense that obviously you're going to get paid more for any success if it's in a tier 1 jurisdiction. That's just how it is. So that's kind of, we have to adjust for that. I mean, if you had similar projects, one is in Colombia and one is in Arizona in the US, and they traded at the same price, obviously the Arizona play would probably be much cheaper, even if they had the identical projects, because there's more suitors if it's in the US. It's critical to the US. I don't think Colombia, well, who knows what Colombia, what's critical in Colombia, but you get my point. So I mean, that's something to adjust for. I mean, the geological risk is one thing, but it also depends. I mean, will you get a premium to your discovery or will you get a discount? Because that obviously affects the upside in monetary value. I mean, what's the monetization value? Anyway, so I mean, these are just some of the plays I think are very interesting, and pretty much all of these are considered, let's say, very high risk and very high reward, and which goes back to, you can't buy 3 of these and it's like, well, I hope I'm gonna get rich tomorrow, whatever. That's not. I mean, I think we have to kind of assume that we have to. I think to be conservative, we have to assume. I mean, most of the, even though it might feel like there's a 50-50 chance most of the time, there's like, oh, are they gonna make a discovery or not? Because there's obviously the discrepancy between, you can make a discovery hole and still not end up proving something of significance. That can of course happen. But I think these are the ones where it's like, I prefer banked success, margin of safety right now, because then the question is more when, not if, you're going to make money. You're just waiting mostly for metal prices to maybe go a bit higher, but especially for the sentiment to turn around. And some of these stories, if they find nothing, there's nothing really to revalue. So if the story kind of gets killed and then the sentiment changes, I mean, it's not gonna do too well in that sense. But some of these, because potentially so lowly priced, everybody hates risk. As soon as there's risk in bear markets, everybody hates risk. In bull markets, everybody thinks about how much they can make if things go well. Now everybody's focusing on the on the downside. When stuff is cheap, low, people focus on the downside. When stuff is highly valued, people think about the upside potential. Oh, I think there's a chance this stock can go even higher. Then they buy. If there's even a chance a really cheap company can go even lower, then they want to sell or not buy. So I mean, let's go over a few, I guess. Inflection, I mean, to me, one of the most interesting pre-discovery plays I know about. Huge insider ownership. I've talked about them recently, so I'm not gonna, cover too much. But just a truckload of projects might be on the cusp of making a discovery here at Duck Creek. And again, I just go back to market cap. Well, I have that here, I guess. 19 million, 18 million today. And again, we've covered what some of these projects can be worth. They would get, if Anglo Gold earned in fully, they would get 75% interest. But 75% interest of something that is large in Australia, that's a huge amount. Plus they get royalties as well, which might be equivalent to 5 to 10% of the project on top. So maybe 30 to 35% de facto interest. If it's a big project, that's going to be worth multiples of this. And they, of course, the upside is that, or the worst case scenario, they don't find anything across this 200 kilometer land package. Then the upside cases is they make a significant discovery, and obviously it's not a end all be all, because there's potential with this amount of strike. They could make more than one discovery. So it's a very, again, our greatest advantage is that downside is always 100%. With these cases, most of them probably won't go down 100%, but maybe down 50, 60%, which is actually nothing to sneeze at, in the sense that, hey, if they go down 50%, that's equivalent to, you can afford two to go down 50% before you have one going down 100%, obviously. So I mean, I'm not gonna go into detail. This one I really like, one of my largest, if not the largest pre-discovery play I own. Simply because I think it's so diversified to the upside. I mean, it kind of feels like you get 29 very high risk, high reward juniors in one, and there's a partner that funds, all to be tested. It's one of the most unique cases I've come across in the exploration space. Do I know they're gonna make a North Parks discovery or Acadia or several of them? Absolutely no idea. I do think, well, the only thing I know is that it's priced at 18 million CAD. So the upside is substantial, to say the least. Hannan Metals, I've talked about this as well. I mean, pretty straightforward case. It's actually done pretty well recently when they're doing a financing, 47 million. One could say maybe an incipient San Martin. Obviously they have outcropping mineralization there. They actually have that down in Valiente as well. But it's a bit similar to Inflection. I know what the downside is, but they have, I guess one could say, several districts for coppery potential. They have sediment hosted up here, and Yogmek is involved with that, so you know the price is large. And they have found possibly another porphyry district down here, and you can see other big mines in the area. So they might have one of the few undiscovered porphyry districts in Latin America or South America. So that's the only thing I know. Good people involved. They're hunting for absolute elephants. Might have an entire near surface district, more than one actually. So again, I mean, if they do end up finding something substantial like proving up a porphyry district, we can only imagine what the value could be. If they prove up one or two more large sediment copper hosted deposits, we can only imagine what the value could be. And we know this is what we're paying to play the bet. That's obviously what we want. I mean, we don't want let's say there's a 80% chance of failure, and in case it's success, they find 1 million ounces of gold or something. If it's 80% chance of failure, then we obviously want to, stack the risk reward in the sense that we want as high upside potential as we can find. We don't want to be in the position where it's like, even if a junior works out, it's going to go up 100% or 200%, and the downside risk is both high and the fall is high. That doesn't really add up. Prismo, I talked about them recently. Again, very straightforward play to me. They have more projects, but it's like, to sum it up, hot breccia, there's very large copper deposits around. Resolution, absolute world class. I guess Ray is, I don't know, it's very large and good grades as well. Miami as well, Freeport, Asarco, Rio Tinto, Capstone. So, obviously this is probably the best copper elephant hunting ground in the US. If I had to guess, I think Arizona is number one, historically speaking. 10 major copper mines in Arizona. So it's like, Mother Nature has in place a lot of very large copper porphyries here. And this, as I've said before, this is pretty much very, very easy bet proposition. They have a deep target that they plan to test as soon as they're raising money now actually, and a drill permit is nearly complete. So assuming they get the drill permit, assuming they get the money, they're gonna test this. And this looks like a pretty, concise target, which I think again is good. It's not like they're gonna be wildcatting and go looking for something. No, historic drilling showed that there's high-grade assays in historic drill holes, and they found a conductive body at depth. So I would assume within the first, let's say, 5 holes, either they show they're onto something or they're not onto something. If they're not onto something, I expect a 50-60% correction in the stock. They have more projects, so there's some value. Even if you threw away this project, there's some value in the company still, which is good. But this is the main dish that I see. Obviously very high risk, high reward. if they do end up finding something, again, the only thing, the context is at least that we know there's some giant copper porphyries in the area. So you know this is fertile ground. So it's not absolutely not out of the realms of possibilities that the high-grade copper hits here is suggesting that, hey, I mean, that there might be something big down here. And, of course, how big, how good it is, nobody can know. But we know that the market cap probably after dilution won't be much higher than 12 million CAD. And then you can, I mean, yeah, it would imply there's a 10% chance of finding something worth 120 million, 1% chance of finding something worth 1.2 billion, etc., etc. So what the actual odds of finding something of significance, nobody has an idea. But if it's 10%, to find something worth $1 billion, then that's still 100 million. And that's goes back to, it's like we can't really be outcome dependent, because even if we assume the chance of success is only 10%. I'm not saying it is, nobody knows. I'm just saying that if we assume that, which I don't think is over promotional at all, then of course, like always, let's say they drill, they miss, stock goes down 50-60%. People are gonna say, you know, bashers or people who were on the sidelines hoping not to, you know, be left out, and they're like, oh, you know, look at that crap, look how dumb everyone is who bet on it. No, I mean, if one assumes there's like a 10% chance, and it's like, okay, 9 times out of 10, I'm gonna lose money, let's say. I'm gonna lose money on this. But in the case that the 10% happens, I'm gonna make a shit ton of money. So if they miss, that doesn't mean it was a bad bet. Doesn't mean that at all. We just saw the outcome. I mean, again, you can lose with aces. That doesn't mean aces was a bad play. In this case, it's more like you're playing a hand with very low chance of winning, but if you win, you're not just going to double up. You might end up making 10, 20, 30, 40 times your money. Again, excuse me. Again, depending on what they actually find. So that's one thing to, like, don't take stuff personally. It's like, if you think there's a low chance of success, but you bet an amount where it's like, this is not going to kill my portfolio, and I understand the high risk nature of it. Then you know it's like, okay, I'm not gonna win on all of these, not even close perhaps, but I still understand that, hey, if they find something, given what I paid, what the market cap was, it could pay for 20 other such stories at similar position sizes that get cut in half or worse. So it's like, again, if it's a total fallacy to look at every speculative drill play or whatever. It's like, oh, if you bought something, they ended up making a discovery, then that was a good buy. But every single one that did not end up making a discovery was a bad buy. That's absolute worthless information, unless we can track why exactly we made a bad decision. Otherwise, it's Schrodinger's cat. If nobody knows, and we don't know, nobody can tell beforehand. Nobody knows, not even insiders know what's going to show up here if they drill. So if it's unknowable, how on earth can we always say there's like, oh, anytime I bet on something and it misses, it was a bad buy? That's, again, worthless information, because nobody knows. It would assume that it was a way of knowing, and that we shouldn't have made the investment. Or in the case of something actually working out, oh, I should have bought that. It was a mistake not buying it. Why was it a mistake not buying it? Nobody knew. You didn't have the information that we later got. This is just, again, a point to, like, not trying to. I mean, if you understand the risks and that you need to diversify away the company risk, I don't see any problem with betting on high risk, high reward stories, if it makes sense mathematically. And that does, I mean, you could have 80% failure rate and still make money in the high risk, high reward business, because the few wins, if you ride them long enough, they're gonna more than pay for the losers. So you can look dumb most of the time and still make money. That's the point. Brixton, very much empire, which I talked about in the last video. This is the stuff I like. I mean, BC golden, I guess this is kind of outside the golden triangle, I think, but still, I mean, there's no more. The most finite thing in the world is land, and especially prospective land, and especially prospective land in tier 1 jurisdictions. Brixton has, this is like they have, this is theirs. There's no more BCs being made. BC was made, I mean, the geology and all that, over, you know, millions of years ago and stuff. And the deposition of the deposits were made millions of years. There's not porphyries popping up in other places on a day-to-day basis. So just to have a land package like this, I mean, in itself, I love that idea. It's like, this is a very large slice of ground, and you can see all the, you know, copper rock samples. And I mean, it would take years to explore all of this, obviously, but they have this patented in a sense. All the potential within this right now belongs to Brixton, and they are drilling right now. And I mean, I'm hoping we get a kind of aha moment where they drill maybe, I don't know, you know, almost 1,000 meters of like 0.7% copper or 8% copper, you know, closer to the phyllo mining hole. Then I think Brixton would absolutely take off, because again, if you would find half or even close to I mean, that's saying a lot. That's not what I'm saying is going to happen. But you can imagine what the value could be if you found something close to a phyllo mining in British Columbia. And of course, as we know, BHP is in it, so it's not like I'm sitting here talking crazy. BHP has the highest threshold of any mining company when it comes to size and value, because they are in fact the largest company around. If BHP sees potential, then they see BHP potential, and then they're talking billions of dollars in potential. They wouldn't give a crap about a $1 billion project, NPV of $1 billion. No, it's way too small for them. And then of course we have Hog Heaven, and they're going to be testing other targets as well, and they have a lot of targets. Also one of these where it's like market cap might be 49 million. I mean, if they find something of substantial, I showed you the market caps of some of the other stories. Personally, I think Brixton is very cheap. Kodiak Copper, similar to the other ones. It's like, well, they have meat on the bones already. One could say some of the other ones have as well, but they have the gate zone. Question is, will it get bigger? And they will be drilling this year. We know what happened when they made the high-grade discovery first, kind of like the Alkane situation, but the gate zone proved not to be as large as everyone hoped. It's like, it's probably not a standalone deposit, not at today's copper price. But they have, I think, 18 targets, and they got this target which is potentially one very large one. Again, goes back to the market caps. Assuming any of these show anything close to what these other ones are finding, that would be multiple, sometimes many multiples, well, sometimes even more than that, on their market cap. So how many of these, for example, do you think need to work out? Not many. Given the market cap, if one of these finds something, $1 billion project or more, and that's not out of the realm of possibilities either, they would pay for all the other ones. That's the idea behind it. Meaning that, well, if you had a 50% chance, if you have 50% hit rate, half of these ended up finding something of significance, portfolio would do totally insane if you rode them to completion, like either a buyout or whatever. That's the hard part, I think. We have like, yeah, core assets. They also have a. Do they have the new news release here? Maybe not. Here's one. They have a bunch of stuff. I mean, they have the CRD is kind of what got people interested. But they almost like Brixton. They have an absolutely enormous land package, so they own this piece of the world right now, which is not bad in British Columbia. This is probably one of those jurisdictions where actual success, same identical success compared to most other places, you would get the highest price at it here. Again, simple story. What's the market cap? I guess they need to raise some money though. 19 million. I mean, if there was even, I'm not going to say even because that's relatively high. If there was like a 30% chance that I thought, oh, any of these units are going to make for sure, or I can't say for sure, but like, if any of these had a 30% chance of making a significant discovery within the next 2 years, these would all be obscenely undervalued right now, even though they would come with 70% risk of failure. Still, mathematically, if you could diversify away the company risk, insanely undervalued, if that were the case. I don't think there's a 30% chance, because that seems high, but even if it's 10%, so, you know, many of these would still be cheap, I think. Maybe even 5%. Kingfisher Metals, I participated in this placement. They recently staked more ground. I think they have... maybe they haven't updated with the new ground. But I would say very straightforward. It's like... Okay. A lot of copper... big copper anomalies. Here you can see, I love slides like this. Here you can see the cell deposit, copper soil geochemistry. Well, you can fit that pretty much here, 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 almost here, let's say. And I guess they could test other places as well. Gold soil geochemistry, at least here, pretty much up here as well. And then you have the actual, I think this is the actual footprint of the deposit. So yeah, is that super easy to find? Not really. I mean, if you have this big, I mean, in this case, for example, it only makes up a, you know, what might that be, like 20% of the actual footprint? So you got to find it as well. That's the trick, and that goes back to like having, let's say, good backers who understand the process, or like in Inflection's case, you have a major who really understands the process and the value. But in my opinion, no-brainer, high risk, high reward bet. Let's see here, 8 million. What's the? I mean, we know what GT Gold sold for, 500 million or thereabouts. Again, market. I don't know if it's been updated with the placement though, but let's say 10 million or 12 million, whatever. That's a few multiples below. Let's say 20 million, so we have some dilution. 200 divided by 20, 25x. If you found a GT Gold, probably that would be a bit more actual dilution on the way, but still, they have several targets. It could also be better than GT Gold. That's stuff we don't know. We just know that, hey, if they found something that's worth as much as GT Gold, then it's 500 million is the upside. Then we can, it's like, okay, what are the chances that might happen? I don't know. They have more kicks, you know, they have more cans to kick, so it might not just be one target, or let's say they find a GT deposit, a cell deposit, or they find two cell deposits. So that's the beauty of it. But it's like, if we assume it's like, okay, 5 to 10% chance of success of finding something of significance. If it's cheap, I don't think that's a stretch, because like these look like, again, like legit targets, as we can see just based on the footprints. So it's Mother Nature that's telling us that there's potential here. It's not just me saying that. Then we have BCM. And anyone who's listened to Quentin, I mean, the Colorado School of Mines, some student has done work on this, and I mean, I'm not gonna try to pretend that I know how to evaluate it, but according to that study, you know, it looks like there might be something huge here. They have hit stuff at depth, but I think it's mostly, I mean, here you have 6.1 meters, so 0.28 and almost 100 grams per ton AG. Follow-up drilling did not expand this enormous drilling, has not yet drilled any holes in this discovery null part of the project area. No historic drilling, yada yada yada. Oh, this was a very old hole, I guess. Oh yeah, the discovery story. So, but I think they've hit. What have they hit? Show must be 150 meters of 0.6. I mean, that's a pretty impressive hole. But that's mineralized skarn. But as we know, skarn forms around the porphyry. So maybe it's like what they're seeing is that, oh geez, this the geochemistry or the values or whatever, the footprint, geophysics maybe, that's like, oh, it appears there's something very large here. So I mean, here they obviously hit smoke, so they know there's copper there, and we know that skarn forms around in near proximity of a porphyry. Where is it? How deep is it? That's the stuff we don't know. BCM has a market cap of 14 million. Again, it's like very much high risk, high reward stuff. It's like if we just look at what some of the success stories, how much they can, how high they can get valued. Even if many of these, if they have a 10% chance of finding a saddle type deposit, that just makes them look cheap still. Most of them. And then we know it's like, yeah, that's saddle. Let's say copper is doing better now. Copper is expected to do even better in the future, so whatever success is worth today, it might get more and more valuable, yada yada yada. And of course then we have the fact that it's open-ended in the sense that, hey, 500, yeah, that's what they paid for saddle, but is saddle like a world-class find? I guess I don't think so. I mean, look at Philo Mining, they're up in the Andes, and that's at 3 billion, NGX is at 0.6 billion. Stuff like that. So I mean, given I think actually Utah placed highest on the Fraser Institute ranking. So at face value, you should get a lot more for the same success in Utah than you should get in Peru or Chile, for example. And they have that Sergey guy. Do they have that here? I don't remember his name, Sergey. But apparently, here, I guess. Sergey Diakov. So he's apparently a rock star. I think he was... I don't remember exactly his track record, but I think he was part of maybe Oyotoga discovery or something. That is just like, he's an elephant finder. So if he really likes this project and the studies suggest that there's something big here, there's probably is potential for something very big. Pacific Ridge taking a big beating in the market. I think that's down to 9 million. This is, I mean, they have also quite a few kicks at the can. Here you can see recent activity in BC. Tech, 15% of American Eagle, that's the one I showed, which is up to like 73 million. BHP, Brixton, Tech, Kodiak Copper. I have no idea who these guys are. And here you have some of the, 450 million, Newmont Red Chris, joint venture, Bull leading with Omar. So again, it's like the big companies want copper in BC. This is where one of the places where success should get the highest value. Clayul has, the momentum is suggesting that people have gotten bored with Clayul. I don't know if when that's going to change, is the market convinced that it's like, yeah, you have a deposit there, but right now it's not good enough to stand out? Is that the question? I mean, they're testing other targets as well. I mean, as we all know, at some prices, and I was going to say a lot of projects make a lot of sense. I mean, that's basically how Ross Beatty made a lot of his money. He bought up a bunch of copper projects which were economic at the time, and then when copper went higher, as the supply-demand picture got much better, the price of copper went up. All of a sudden, those projects were mine-worthy at the time, at least, and he sold them for, I don't know, $1 billion plus or something. So is Pacific Ridge cheap? Yeah, I think so. What's going to make the market believe again? I don't know exactly. But they have a few cans to kick. So we just know that, again, it's like market gives almost zero credit that they have anything close to being something mine-worthy. I'm not sure I agree with that. But you can say the same stuff with a lot of it. It's just that Pacific Ridge is actually more advanced than most. Red Canyon, another new quest company. You probably know I'm a big fan of these guys. They actually put out a news release. They raised money recently. 8 million. I think that's post. I think that's post financing, not 100% sure. Red Canyon commences drilling its 100% owned Peak Copper Gold project. It's in British Columbia. Here we have some copper mines around. And yeah, so these are some of the targets. They don't have that much money, so they're doing a limited initial program for up to 2,000 meters of drilling. Will consist of 2,000 series of high priority copper gold porphyry targets. So I mean, they have a very impressive technical team. Again, it's the new quest type or new quest backed company, and they seem to bring. I mean, just look at Inflection Resources, for example. So obviously, I mean, I think they have. Who do they have? They have like Craig Hart, I'm pretty sure. I'm a shareholder, by the way. Where are the people? Here. Dr. Craig Hart, Alistair, Caleb, Wendell. Chief Geologist for KGHM, yeah, sounds like a big gun. Senior positions of Kinross Gold, Barrick Gold, Hecla Mining. Yeah, so I guess these are, and including Alistair, Caleb, Kinross, Alistair, Kinross, of course Inflection, and I think, he has very impressive resume. I don't think they can even fit his entire resume. Wendell with former president, CEO, Exeter Resources. So again, really good team behind this, and they always think from the end, like they did with Inflection and Headwater. They think, what do the majors want? So they figure out what's the best exit strategy, and then they reverse engineer. So what do we got at stake? So they're testing the Peak project, which is here. Peak project here. So I mean, it's in the vicinity of other projects. So it's not out in the middle of nowhere and all that. And they're gonna do the cheap exploration technique, which they did from their Inflection days, where it's like they want to, because they don't want to dilute. I mean, insider own management insiders 47%. Believe me, they do not want to dilute. They do not want to throw away money. So they're going to be doing limited testing, like the Inflection guys did back in the start, and they're actually doing that right now with the phase 1 backed by Anglo. So they're going to be testing. I mean, if these are legit porphyries, if any of these are porphyries, if they do some short holes, they should see porphyry alteration. So they can kind of quickly discard that immediately. So again, it's like, let's say 2 or 3 of these, they drill that short holes, they see porphyry alteration, okay, boom, okay, discard the other ones immediately. Then they can start doing, I don't know, more geophysics and all that. Maybe get someone to earn in, like they did with Inflection, with AngloGold, like they did with Headwater, with Newcrest, and now Newmont. Keeping dilution low, and they know, of course, that it's like, okay, this could be costly, but let's do the de-risking. Let's show their success. Obviously, that's going to make it a lot easier. It's like Inflection, for example, had to kind of prove that they could, in that case, drill through cover, because a lot of people doubted that. So they showed that was possible. Then AngloGold comes in with a fat deal. And they have a bunch of projects. So what are the odds that at the end of the day they're going to make a discovery, one discovery or more, that a major is going to be buying? Who knows? I know what the market cap is right now, 18 million or 8 million. That's the beauty of it. But it's like, compare that. I mean, this is, I think, where I was going to say art comes in. There's no shortage of, let's say, gold explorers or silver explorers that might be trading in similar market caps like some of these. But when you think like, how would this differentiate itself, Red Canyon, for example, versus, the run-of-the-mill pre-discovery gold play? Well, there might be a big difference. Here you get a team, you get a superb technical team, huge skin in the game. They've already shown with their other companies in the Newcrest group, they are very good at spotting major type opportunities. So that goes back to what I've been saying for a long time. There's like, yes, a lot of stuff is cheap right now, especially a lot of stuff is lowly valued and looks cheap. But if you compare some of these companies to other companies, some are just exponentially cheaper than others. There's a bunch of gold or silver juniors I probably wouldn't touch at 8 million. But whereas I might think, hey, this is super cheap. Because again, you also know, what are these guys after? You know they pick projects that have major potential, major minor potential. So you know whatever they're going after is something they believe major's gonna buy one day. Which we're talking in that case, I'm assuming hundreds of millions of dollars or billion plus. So you know the price is large. You know they have many cans to kick. You know they will be very conservative with the money. You know they're going to do the best for shareholders because they are the largest shareholders. And again, compare that to, we have a junior gold explorer at 8 million. What are we looking for? We're looking for 1 million ounces in the middle of nowhere. Which even if they were successful, nobody would give a shit. That could not be monetized. They would just dilute for no reason other than, having their salaries, paying themselves salaries. Because even if what they hope is there, it's not going to mean anything. Nobody's going to buy it. Nobody's going to build it. In that case, they're diluting to prove up they have nothing, in a sense. So it's just extreme difference between juniors and juniors. That's one thing. Because I tend to see a lot of people like, these are cheap. These juniors cheap. That is lowly priced or whatever. But it's like, yeah, it's gone down 80% in price, but I still wouldn't touch it. It looks cheap, but is it really? No, they don't have. Might not even have a good idea or a strategy or any backing whatsoever, and crap people and no skin in the game, yada yada. I'm a stock picker first and foremost. That's why I'm always fully invested, because I am always in companies I think are cheap. I don't care where the metals are trading. I don't care what Twitter says the metals are gonna trade in the short term. I don't care if we're in a bull market or a bear market. If something is cheap, it's cheap. And I don't expect my let's say, I don't bank on the metals bailing me out. Because let's face it, if you're right on the micro, on average, the metal prices don't really matter that much. let's say any of these companies put out a 700 meter hole of, or let's say a 200 meter hole of 1% copper, or 600 meter hole of 0.8% copper, or whatever, they will probably revalue many times over, even if copper is down that day. If that ends up being a discovery that some of these are going to prove up, like 300 million tons of high grade copper, or 1 billion tons of good grade copper, or whatever. If you bought them at levels like this, who cares what the market is? Always, copper went down 10%. Well, they actually increased the value. They went from having no value because at face value, because they're in the exploration phase, to proving, we have one of the better deposits in BC or whatever. Of course they're going to be trading multiples higher than they are now. So it makes absolutely no sense, which I see a lot of people doing. It's like, you have this, let's say you have this dirt cheap company, even if it's in this day and age where it's like you would prefer more safety, but let's say you have a really, really cheap high risk high reward play. It's like, it's a 10 million market cap. You think it has a 10% chance of finding a massive copper porphyry, which if that happens, it would go up, I don't know how much, but you're like, I'm bearish on copper. They start drilling. The market, and that was kind of that's been my point. I'm not going to say be my point, but with Snowline or Newfound Gold when that was hot, whatever. It's like the success stories, the really good ones, they can go up in a bear market. They can go up a lot in a bull market. So if I were to sell stuff that I think are really, really cheap, giving me great odds, risk reward is superb. If I would sell that because I think, we're in a bear market, or I think junior's going to go down for the next 6 months, or I have a feeling that gold or copper is going to go down tomorrow, then I'm shooting myself in the foot. Let's say, again, you're like, wow, I think these guys have a, let's say 10-15% chance of making a discovery, and the market is pricing in a 3% chance. So you're like, okay, this is undervalued by hundreds of percent, even if we assume there's a very low chance of success. But I'm not going to buy that because I think we're in a bear. Or somebody on Twitter said juniors are going to go down. Gold is going to go down $100 over the next month. Or copper is going to go down to $4.2 per pound from 4.4, whatever. And you hold off buying because while they're drilling or whatever. Because you're like, we're still in a bear market. Or I think junior prices are going to go down, and then they make a discovery. So it's like, what was the rationale? You thought it was cheap, but you tried to time the market because you think, I think 10 million could become 9 or 8 million. Does that matter if let's put it like this, a no-brainer risk-reward bet, you shouldn't need precision. It's like, at 10, it's a buy. The funny thing though is like at 9 and 8, it would be an even bigger buy, but who cares? So the point is, we do a lot of stupid stuff when we try to time the market. And again, if a company puts out a barn burner hole and it's dirt cheap, it's not going to matter if copper or the metal they drill a discovery and it's down or up that day, or it's down that day. It's going to plow higher anyway. And at the end of the day, that's what's going to dictate. None of these companies are going to go up multiples because over a long period of time, simply because gold and silver goes up if they don't prove anything. But if they do prove something over several years, then it doesn't really matter either where the metal trade really, if you bought them at cheap enough prices. So yeah, that's kind of it. So again, this is not investing advice. I think I own all of these in some way, shape, or form. At least in some portfolios, I was going to say. So consider me biased. But yeah, so I think this is super common sense stuff. The only thing we can control is what we pay for it. And we can again, if we know the people involved are good, we know they wouldn't spend time on anything if they thought it was a sub 3% chance that the Mother Nature could have endowed a specific area with something big and valuable. So balance of probability suggests that I think all of these are probably cheap, undervalued, even if we assume that the chance of success is like 10 to 20%. And that goes back then that, okay, in that case we have to have a basket of these juniors, because if it is indeed 10 to 20% chance of success, we can't go all in on one, we can't go put all our money in 2 or 3, yada yada. We have to have a basket, and again, in order for the success stories to pay for the other ones, we need to be able to ride them. So if you start out with a humongous position, again, you have 3 stocks, you have 33% in each. I mean, how easy is that going to be to ride when, okay, I needed to double, let's say or let's say the 2 other ones go down to 0, and you need the success story to at least go up 200% to be back to even Steven. Is that going to be easy to see that, oh, I'm all in on one stock? And that's just to all in on one stock. It's basically 100% of your portfolio after it's gone up 200%. Well, actually, if the other ones went to 0, it would be 100% anyway, but you get my point. And in order to then make money, I should ride that 100% for some time yet. No, that doesn't work. Really, I mean, it's too much pressure. But if you have, again, if you put even 20% of your portfolio in high risk, high reward place, because you like the idea of some fun exploration. Again, with that said, I do think banked success is still the superior play, and especially the hybrid place where you have a lot of upside potential from exploration you're not paying for, and you're buying what's already there for free, on the cheap. That's superior for compounding perspective. But like me, I like to, I just, the discovery phase, or the idea of a discovery is so intriguing to me that, let's say you do end up putting 20% of your junior portfolio, and then you have 20 different stocks, 1% each. No single position. If a position goes to 0, you lose 1% of your portfolio. Hardly a backbreaking thing. But maybe you make a discovery in 5 or 6 of them, hopefully. But then you again have to be able to ride them fully. And if you start out with a pretty small position size, it's going to be much easier to actually sit still in the boat, as we say in Sweden, and just hodl and let it develop towards blue sky. So it's okay if it goes up 200%, that you're not going to sell everything after it doubles and you sell everything, and there's no way for the ones that make it to pay for the other high risk reward ones, because in that case the math doesn't add up. Yeah, that's about it. Thanks for listening. Don't consider this investing advice. Some of these companies are banner sponsors to me as well, so consider me biased. And again, I would not bet the farm on any one of these. I think most, if not all of them, are cheap, even if you assume the very high risk. But then that's what we need to diversify away. So yeah, that's just my tip of anything. That even if some of these have theoretically 10, 20, 30, 40 bagger potential, we assume that it's a very low chance of that happening, so we can't bet too much on any specific one. And in case we do the shotgun approach, we need to let the ones that actually end up making a discovery. We can't just be selling everything, sell on a double or whatever, because in that case you're not going to pay for everything. In reality, that might turn out to, like, let's say some of these, they make some kind of discovery hold, they go up 100%. You don't sell because you're like, oh, I need this to go up, the ones that work, I need to ride them for maybe 1 to 3 years for them to pay for a bunch of other ones that didn't make it. But then after popping 100%, they drill more and they end up not finding anything. I simply think that should not be seen as a success story. It should simply be seen like a false start, if you know what I mean. You're not an idiot for not selling at 100% return, because some of them will have discovery holes that are not false starts, but the 100% is just the very first step of maybe a 10 to 20 bagger journey. That's my point. Again, not being outcome dependent. Just because one case or one company makes a discovery that proved to not become much, so in hindsight it's like, oh, I should have sold at 100+%. If you take that to the bank and just assume that's what you should always do, then you're going to sell all the 10, 20, 30 baggers on the first 100% pop as well. So that's, again, like meaningless information in a sense, unless we can figure out why it should be a one-off. So yeah, thanks for listening. Take care. Bye.